All right, well, Comcast, the latest media giant to report earnings, seeing net income rise just under 8% on a year-over-year basis. The company also adding 3 million subscribers to its streaming platform, Peacock, in the fourth quarter, bringing its total to 31 million. We want to bring in Jonathan Chaplin. He's New Street Research managing partner, joining us now. Jonathan, it's great to see you here. Taking a look at Comcast stock up just about 5%. It seems like, at least at the surface here, taking a look at the initial take on this earnings report, a strong quarter here for the company. What's your reaction?
Yeah, so I think financial results were great. Their revenue was better in pretty much every segment than people expected. Profitability was better across the board as well. If you adjust out the impact of severance charges, which are sort of one-time impacts that nobody anticipated. So overall, looking at the financials, this was just clearly a better than expected quarter, which is what's driving the stock up today.
With Peacock and the subscriber numbers that we've seen and all of the kind of streaming news that we've seen come forward this week, of course, comparing Comcast's service with Netflix and what we've seen come through in their subscriber figures, where ultimately does this tell you about the consumer who is looking at the entertainment landscape right now and deciding where they're getting the most value?
So, our thoughts on the streaming landscape in general, or the content landscape in general, is that it's oversupplied, and ultimately there won't be enough dollars going around to support all of the different platforms out there. I think the way that Comcast is approaching it, though, is a little bit different from everybody else in a couple of respects. First of all, they're really looking at Peacock as an extension of, or sort of part of, an integrated media business where they've got linear channels and Peacock, and they're running the businesses in terms of sort of content production, as well as their relationships with advertisers in an integrated fashion. And they're really focused at this stage on sort of scaling in the US market as opposed to trying to build out a global platform. And so as we look at Peacock, what I think we've passed the peak of losses for Peacock. They're probably going to stabilize in terms of programming costs here. They're growing subscribers at a pretty phenomenal rate. And if they can continue to do that, this is going to be the second streaming platform that crosses the line into profitability over the course of probably the next sort of 4 to 6 quarters in our view.
Jonathan, I'm curious to get your take, more broadly speaking, when you're trying to evaluate a streamer, specifically focusing on their Peacock business, the value add that is to a company the size of Comcast, and comparing that, and I guess trying to really strategize that in with some of the challenges and headwinds that are going on with the remainder of the streaming sector. Reports out today that maybe there could be an interested buyout here for Paramount. How big of a value add do you see the streaming service Peacock being here for Comcast business?
So I think if you were to look at Peacock as a standalone business, this will ultimately be a very valuable business for Comcast. But it's not really a standalone business. You have to look at it in the context of NBCU overall. So what's happening is the way content is being consumed is shifting. They've got these legacy media properties over at NBCU, which are under pressure, and they're building Peacock alongside those legacy properties to ensure that they're positioned to capture the sort of the content market as it shifts from linear to streaming. And so it's when you look at NBCU as a totality, the objective really is to kind of preserve the value that they have in that overall franchise using Peacock, as opposed to sort of Peacock being an entity of standalone value that adds to the value of NBCU. That, what they're creating in value at Peacock, they're losing to some extent on the other side of the house.
Jonathan Chaplin, New Street Research Managing Partner. Jonathan, thanks so much for taking the time here to break down earnings results from Comcast.
No worries. Thank you.